Hi there, a very good morning, good afternoon to all of you, depending on wherever you're watching me. This is Simply Talks, and I'm here with another video. And this time, this video corresponds to the market because there is a lot of fear mongering that is going on. There is a lot of talk of this market collapsing even further from here. So we'll discuss in detail about that. Plus, we'll discuss about some levels in the small cap, mid caps, etc. Nifty. We'll talk in detail about the markets overall as to where we are, where we could be headed, etc., and how much longer this pain could be. Plus, the fact that a lot of people are talking about probably not continuing with the SIP, and there are a lot of talks of different kind going on. So, we'll discuss in detail about everything. Let's get started. First of all, disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should deal with their own due diligence and research, and I'm not in favor or against any company that I talk about. I'm not a member of the NSC and BSC, and that I'm not a portfolio advisor. Whatever discussions I have with you is purely on the basis of my experience into the market, and whatever decisions with respect to stocks or markets you take, kindly take that on note that it is laden with market risk, and kindly discuss that with your official financial advisor before doing that. Now, before I talk about the markets, a small request, kindly support me on Patreon. The link will be in the description. Once you do that, help me grow the channel, help you also ask me questions, seek out answers in greater detail. Once you get the membership, you'll have access to my portfolio, my watch list, and a number of podcasts I put up from time to time on markets, on domestic and global economies, a long-term pick in terms of valuations as to which stocks are looking or which sectors are looking good, etc. So you can check the links in the description. Now let me take you to the screener website in order to make you understand as to where we are in terms of earnings, earnings and all. So let's just have a look at the Nifty. First, I'll discuss about the Nifty, and then I'll discuss about all the things that are going on in the market, which is sending more shivers to a normal retail investor who is in the market for the last 3 4 years. I have been in this market since 2011 November, around October November. I have seen those times. So we'll discuss in detail from 2011 till now what I have seen and how things really go about looking at the history. So if you look at the Nifty around 23,000 at the moment, it is down around 12% from the top, trading at around 20 times earnings. It's not trading at a very steep valuation. If I just search, if you type on Google Nifty EPS, then you'll have an understanding uh, as to how the EPS is at the moment. So if you look at on trend line, the EPS is around 1124 rupees. Even if this gets down in the next quarter to around 1100 rupees, let's say, the market is very interestingly poised. So at 1124 rupees of EPS, the market is trading at around 20.5 times. Yes, so it's showing 20.5 times. It's trading at 20.5 times. Now let's see how has been the PE ratio of the market for the last maybe about 5 years. Let's see the 5 year chart of it. On an average, the PE has remained around 22, 23. Let's see a 10-year average because the PE jumped dramatically during that, I'm sorry, surge in 2021. Even on that basis, the average is around 23, 24 times. If we take this thing out, if we take this kind of move that happened with respect to PE expansion of the market, if we take that out, even on an average aggregate level, the markets have had a PE of around 2021. So, and always the market PE is taken on 1 year forward basis. So, if I look at 1100 rupees for this year, if you say that it will be around 1100 rupees for this year, then we are looking at a scenario where the PE would be around 1230 rupees for next year, based on 23,000 as the Nifty levels on 1230 rupees. We are talking of Nifty trading at around 18.7 times. Now, what I have seen with my experience over the last last decade or so, last 12, 13 years being in this market, is that market bottoms out around 18 to 18 and a half times 1 year forward earnings. Now that turns out to be around 22,500. 1 year forward earning, as I mentioned, is around 1232. This is where the market may bottom out, and I have kept saying, I have said that earlier as well, a month back, 2 months back, that around 22,500 there will be value in the market even from 1 year perspective. And so uh, from 26,300, if we round that off to 22,500, the decline would be around 15% or so, 14.5% from the top. The market would have corrected substantially. So that's about the Nifty. I don't see Nifty crashing to say a 21,000, 20,500, unless there is some really external news, bad external news that comes in and capitulates the market further. Even at those levels, there'll be a lot of buyers that would come in. So 22,500 is, in my opinion, a worst case scenario in here. Now, what is going on in this market today is has always been the case, that has went on, that had gone on over the last, say, 7, 8, 10, 15 years. So let's look at let's look at the mid and small cap section of the market. Let's look at the small caps, because most of us do trade in the small cap, you can say horizon, in the small cap domain. Now if we look at it, the small caps at the moment is around 47,400, the market is. And if you look at over the last 3 years, now what I'm looking at, this is a 5 year chart of the market. This is a 5 year chart. Now if you look closely, 20 31,000, around 31,000 or so in January of 22, in that run up in the small caps, the mad run up that we saw from March 2020, where the small cap index was around 8,500. From those 8,500 levels, the small cap index sharply went up to around 31,300 in mid January. And then we saw that correction. The correction was around 22%, if you really want to know. This correction was around 22%. From 31,300, we are at 47,300 on closing basis yesterday. The market has just opened. So on a closing basis, on yesterday's numbers, we are at 47,300. Taking that into consideration, over the last 3 years, what has been the CAGR in terms of returns from the small cap index? Let's put this discussion to rest. So 14.5% has been the upside after the correction, after this 18-19% correction from the topic at the current levels. On the lows, the recent lows in the small cap index, we have had a 20% correction. So we have made 14.5% CAGR over the last 3 years in small cap, which is not a big number. Now, why it looks like big is because optically we are looking at a situation where the small cap index were at around 8,600 or so, and we are at 47,000. So let's just take that on as well. Let's just say that if that is 18% of what, so 8,600 was the low there. Let's pinch in a number. Let's just do some trickery with the numbers in here. So 18% over, say, last 5 years. Let's say how things pan out on an 18% basis. So there lies the problem, because here the returns have been around, maybe around 35%. I don't know how the returns have been. So it's around 35-37% CAGR, and that's where people are saying that the returns have been humongous, and probably that's why one needs to be extremely careful in order to look at whether we are extended or not. So the returns have been around maybe around 40%. Let's see what we come out with here. So it's around 40% that we are looking at from those lows. It's around 40% returns CAGR over the last 5 years from the small cap index, and that's why people are saying that okay, over the last 5 years, 40% CAGR on the small cap index is not quite what we should be ending up making. But look at what has happened earlier. Look at how things have panned out earlier. From around say uh, 20,200, the markets fell to 8,800. So it's about a perspective of looking at from where point to point where we look at markets and how returns are seen. So if I say from these levels on the small cap index in January of 18, when we made, we were at around 20,100. From there at 47,300, just about more than doubled over the last, you can say, uh, just give me a second, over the last 7 years. 7 years we have just moved more than double. So let's take that on, because a lot of things are being said, looking at or providing numbers which suffice their belief or anyone's belief. So 20,200, from 20,200 we are at 47,300, and this is a period which is a 7 year period. Now in that 7 year, the returns would be lesser, let's say 25% or so. If we say 25%, it's huge. Look at that, 96,000. Let's say 12%. Let's reduce that further. So we are looking at around 12-13%. So the returns again uh, comes down over the last 7 years. The returns comes down again to around 13%, just under 13%. So it's like this, that whatever time frame you take, the returns would be in that manner. But if you look at it over the last 7 years, there has not been on the index level a lot of froth in the market. Over the last 3 years, there has not been a lot of froth in the market. Over the last 5 years, yes, from a 5 year perspective, yes, but from a 5 year perspective, everything is up in the similar manner. Nifty is up from around 7,500. So if I look at it on relative terms, let's look at Nifty. So Nifty has gone up from 7,500 over the last 5 years to around 23,000, 7,500 to 23. Is it a 13% return which normally Nifty gives? Let's see. It's not. It's 13,900. So should the Nifty come down to 13,900, 14,000, the returns have been around 17% CAGR over that period, or more than that even. Let me have a look. So it's absolutely more than that. It's around 23, 24%. Let's see what has been the return over that period. So if you look at it, everything is expensive from a 5 year perspective. On that basis, so it's around 25%. On that basis, and that's after Nifty is down 12% from the top. On that basis, everything is a sell, and then you have to exit the market, wait for the averages to normal out on a 5 year perspective, and then get into the market. We can very well see this market go down. There's no question about it, that this market could go down even further, and even go to those levels. But we are not sure about it. We have already seen a correction of 20% in the small caps. We have seen corrections of 50, 60, 70% in some of the stocks from the top. We have seen corrections of 30% in top notch companies, in companies that are bellwethers for this economy. We have seen corrections in the Nifty Next 50 kind of companies, in the Nifty 500 companies of more than 30-40%. So there has already been a huge correction in the small and mid caps. And what I want to emphasize here is that I don't think anybody should stop their SIP in any way, and they need to move forward from this. Markets have had corrections. I mean, if you look at the Nifty, we have corrected around 12-13%, at the lowest around 12-13%. we have had multiple corrections of this sort of more than 10% over the last 12 years. I have seen that. So if you look at the nifty per se, or so even if you look at the nifty per se over the last 5 years, let's say an all-time chart of nifty, and so I got into the market in 2011 or so. Yes, around here 2010 November was the high. Around 2011 November is when I got in. So let me just extrapolate these figures. So around October of 2011, October November of 2011, I got in, and the market didn't do anything till October, November of 2013. And you would remember then when BJP came out with their prime ministerial candidate, that's when the market started to move up from August of 2013. In August of 2013, we made a low of 5118, and in December of 2011, around 1 month into my business into the market, we were at 4600. So nothing at all over the next 2 years were made, and then we saw this jump towards around 9000, 120 March 15, and a sharp fall over the next 1 year from 9115 all the way to 6800, then a jump. So this is a fall as well. This is a fall of around 22% that we saw in 2 months. And then if we move forward, we had a rally till 2020, and then eventually we fell around 30-35% from there. Then we had a rally, and everybody talks about that. From 2020 we have gone in one line up till say 24. It's not the case. We went to a high in October of 21 at 18,600. Then we had a lull up till 22 August, June, July, and in June we bottomed out at around you would say uh, in June we bottomed out around 15,100, 200, and then we had another up move in which the market went up, and now we are seeing a correction. So that has always been the case over a 1 year, 1.5 year time period. The markets correct 12-15%. Nothing abnormal about this. Even if the market goes to 22,000 from here, how much would that be? How much would the correction be if I take even 22,000? For that matter, the correction would be around 16-17%, which is not at all a lot. We have seen in 2008 a correction of around 60% in the market. We have seen in this, you can say, problematic run of 20. So this is 2008. You look at it from here, 6300, 6350 by 2009. In fact, in just 8 months, market went from 6300 to 2200. So that was one case. In 2010, we made a high again of 6300, and by around 2011 or so, end of 2011 in December, we were at around 4500 from 6300. And I remember there was talk of, because I was in the market, I was in a very initial stages of the market, there were talks by big players that we are headed to 3500, 3000 on the nifty, and eventually we recovered from 4600. So this is all fear mongering that is going on. This is all talks that we have heard over the last many decades, over the last many years, and always people will again get in at the top and sell at the bottom. Maybe one of you would be that, but I'm trying to save you from that, because if you can weather the storm now for the next few months, say 3 months, I think maximum one more quarter of pain is in here in your stocks. The stocks could go down another 10-15%. But when the up move will begin, if we go down, say, to 22,500, 400, and on the small cap index, we go down further from here. Whenever the move begins, it would be big. It would be similar to the kind we saw between 23 to 24 December, from 23 March. It would be similar to what we saw in 2021. Uh, and it depends on how much we fall. So if we fall more, we are going to bounce back even well and bigger later on. Now it depends on what stocks you have. So you need to consider, if you are buying into small and mid cap stocks, you have to be extremely sure that the results of those companies should be very strong. If the results of those companies are strong, then they will bounce back once the recovery takes place, and you will get your money back. So that is my video for today. I believe that this market is perhaps going through a bear phase, but not in a situation where you would say it is a bear market. But eventually we will get back onto our feet over the next 3 months. I think from April, May onwards, things should get much better, because the numbers will plateau out, and there would be the base effect of the numbers getting better from first quarter FY26. So from a 2 years perspective, I believe the markets are headed much higher from where we are. If you look at the 5 year chart again, we are down, there's no question about it. But the way it is, if you look at it from the small cap index perspective, in June of 2024, in the election, on the election day, we fell to around 43,200. So 10% from here is not out of realms. 43,200 is possible. There could be more pain in store for us in the market for the next maybe 2 3 months, but eventually we are headed much higher from here. The RSI on a 5 year chart also suggests that. So this was a video on the indices. Please like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.